What's good, everyone? Welcome to today's live stream. Yo, all right, okay. Currently live. Let me just share this to my story, and let me share it. Let me share it. Just give me a minute. Okay. Sorry, just give me a minute. Let me reshare this. Let me reshare this. Share. Okay, what's good, everyone? Welcome to today's live session. If this is your first time here, my name is Lightman Chimso, and you're welcome to Light on the Charts, where we're all about simplifying your forex journey. So I'd love to know where you're streaming me from. Where you're streaming me from? Hit in the chat box. Let me know where you're streaming me from exactly. Let me know where you're streaming me from. Me, I'm currently in one of my favorite spots in Port Harcourt, GRA, Nigeria. So I'd love to know. Hit in the chat box. Let me know where you're streaming me from. So I'd love to know where you're streaming me from. Okay, yeah, people are saying we are live. Lecturer. Okay, okay, we're active. Yeah, I myself am active as well. Yeah, we are live. PHCC from PH. Okay, from PH at a church and a calling crowd. Rumodara. All right, so we have people basically all over PH. All right, that's nice. That's nice. That's nice. Yeah, we are live. 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 Evening to you too. Evening to you too. Rumodara and the Italian group at the church from PHCC. All right, that's nice. That's nice. That's nice. It's love to have you all here. It's love to have you all here. So in the last session, we talked about what is forex, and we talked about what is forex, the market sessions, the currency pairs, the basic terminologies, and why beginners get to lose money, and also how to get started in forex. So if you missed the last class, I urge you strongly go check out the video. So my YouTube channel, go check out the video so you actually get to catch us up where we are right now. So you don't everything doesn't get to sound new to you. So go check out the video maybe on a later date, but just go check out the video. It's always going to be saved on YouTube so you can watch it. So go check out the video. So today we are taking things, we're going to be taking things a step forward, a step further. We're talking about candlesticks anatomy, how price really moves, not candlesticks you'll use at home when there's no light. It's not that candlestick we're talking about. We're talking about forex candlesticks, all those charts, right? So for those who have been trading with me, you guys may be asking yourself, how do I get to understand this stuff? How do I get to see this stuff? Yeah, yeah, exactly. So I'm going to be breaking down the candlesticks anatomy and how price really moves into this live session. So we grab a pen, grab a paper, so you get to like jot down things and we're good to go. So before we start, I would love us to wait a little for people, for the numbers to come up a bit so we get to start properly. Let's wait for the numbers to come up a bit. So make sure you share to your story, your WhatsApp status, we are live, make sure you share them to your Instagram, your Snapchat, your WhatsApp, share to your story, that make people know about it. To your friend, to your brother, your father, whoever, make sure people know about it and let them join the class. So let's wait for the numbers to come up a bit before we get to start. Yeah. Let's wait for the numbers to come up a bit. Let's wait for the numbers to come up a bit before we start. Yeah. So okay. Okay, so all right. Okay, let's next 2 minutes. Let's see if the numbers come up a bit. If it doesn't come up, we'll be starting without them and then they get to catch us up wherever they are meeting us at. So yeah. All right. So let's just get the ground running. Let's start. So before I start, I would love to know if you can hear me clearly. If you can hear me clearly and you can see me clearly, drop number one in the chat box. If you can hear me clearly and you can see me clearly, drop number one in the chat box. For those of you who can hear me clearly and see me clearly, drop number one in the chat box. Drop number one in the chat box. Drop number one in the chat box. If you can hear me clearly, you can see me clearly. If you can hear me. All right. Make sure you share to your WhatsApp story, your Instagram story, your WhatsApp status, and or across all your socials. So let's start. Before we talk about candlesticks, right? You need to understand one thing. You guys need to understand one thing. Not everyone trades the market the same way. Everyone have their different trading patterns and different trading perspectives. So that's what I would love you guys to understand. Not everyone trades the market the same way. We have scalpers, we have day traders, and we have swing traders, right? So those are the types of traders. Those are the types of traders. And types of traders, we have scalpers, we have day traders, and we have swing traders. So who are scalpers, right? So who are scalpers? So scalpers, they are traders that stick to smaller time frames, like the 5 minutes and the 1 minute to make trading decisions and to get profits from those small price movement. So later on in this session, I'll be explaining what time frames are. But scalpers are basically traders that trade, small price movements and then they get to make small profit and then they're out of the market. So those are who scalpers are. So let me break it down like this. Now imagine scalpers are like roadside sellers, right? Scalpers are like roadside sellers. And they get to sell, retail products, little quantity, and then they get to make tiny profits from those products they sell. And then the next type of trader we're going to be talking about are day traders, where I fall into. I'm a day traders. And day traders, we are traders who make our trading decisions within a particular trading day. We don't hold trades overnight. It doesn't cross to the next day. It's within that same day. We get to decide on the direction, we get to trade within that day and close out within that day. And the next type of trader is the swing traders. All right, the swing traders. They are traders who hold trade positions for more than one trading day. They stick to bigger time frames like 1 hour, the 4 hours, and the daily time frame. Yeah. So swing traders they get to hold trades for days. They can open a trade on Monday and then hold it till up until like Friday. Following those are swing traders. Yeah. So those are the swing traders, and also this is an important line, right? Your style determines how you read candlesticks. That is why this matters. Your style, the way you trade, determines how you read candlesticks. So now that takes us to how people actually analyze the market, right? how people analyze the market. Now, that takes us to how people analyze the market, and we have basically three different ways. The first one is the technical analysis. That is the one we are going to be talking about today. That's the one we actually specialize in, technical analysis. And next one is the fundamental analysis, and the third one is sentiment analysis. Yeah. So, what a technical analysis? Technical analysis is, as a technical, I myself am a technical trader, so I get to, mark my levels, do my analysis on the charts, right? Mark my levels, do my analysis on the chart, study candlesticks and what is like, and figure out what is likely going to happen in the market, and then I take trades based off on that. For fundamental analysis, this type of traders they get to analyze the market with economic data of a particular currency, like on GBP USD, for example. GBP USD, that's the British pound US dollar. The fundamental traders they get to like analyze with you know US economy data or the British economy data. So that is how they get to analyze. And then sentiment analysis is basically the type of analysis they feel, like emotions, the emotions of the market. That's how they get to analyze. If people are greedy or if people are afraid. Yeah, so that is how they get to analyze the markets. So that takes us to candlesticks and what they represent, right? Candlesticks and what they represent. So I want to say this, regardless of your trading style or analysis style, one thing is constant, price always speaks first, and price will always speak through candlesticks. Yeah. So now we're going to be talking about candlesticks and what they represent. Candlesticks and what they represent. Candlesticks and what they represent, right? So now, sorry, I'm coming. Let me take this. So from here, someone is saying I ended the live. I didn't end the live. You can hear me clearly. Drop number one in the chat box. If you can hear me clearly, drop number one in the chat box. You can hear me clearly. If you can hear me clearly, drop number one in the chat box. If you can hear me clearly. Okay, 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 one. Okay, 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 one. All right, okay, okay. So you guys can hear me clearly. All right. So now next we we're gonna be talking about is candlesticks and what they represent. Right. What do candlesticks represent? So candlesticks basically tell the story of what is happening in the market, right? What is actually happening between buyers and sellers in the market. That is what candlesticks represent. They give us this information so as we traders, as technical traders, right? We doing a technical analysis, we get to understand what's basically happening in the market, so we get to take our trading decisions. So that is what candlesticks they represent. They represent how price is being moved day in, day out, how buyers and sellers are, reacting to price and stuff like that. How they get to take trade positions, get to enter into trades, and it means how we get to enter into trade. So that is basically what candlesticks tells us, and that is what they represent. So now we have types of candlesticks. That takes us types of candlesticks, right? Types of candlesticks. So we have the bullish and the bearish candlesticks. So the bullish candlesticks are usually green in color, and don't worry, I'll take us to the chart so we get to see and understand better. And then the bearish candlesticks are red in color. So those are the types of candlesticks we have. And yeah, so those are the types of candlesticks we have, and that's it. So now today, sorry, someone just walked in. So now when candlesticks are bullish, it means buyers are actually in control. And when candlesticks are printing bearish, which is red, means sellers are actually in control. So the context of the candlesticks matters more than the candle itself, right? So that's basically what candlesticks are all about. We have two candlesticks, the bullish and the bearish candlesticks. And that takes us to the next point. We have the anatomy of the candlestick. So we have the first point, the open, the high, the low, and close. I'll take us to the chart and then we get it. I get to understand. So we have the open. The open is where price open for that particular trading day. The high is the highest point price actually go to, and the low is the lowest price the candlesticks actually go to, market price actually goes to, and then the close it's where it finally closed at. Now let me share my screen. Let me take us to the chart. Right. Okay, you guys can see this. You guys can see right now. So these are candlesticks, right? Now let me take us to the drawing I made to get to understand what I'm talking about. So now candlestick consists of the body. Let's say this is let's say this okay, let's say this is a bullish candlestick, right? Consists of the body, the wick, the close, the open, and the low. Alright. So now, since it's a bullish candlestick, now one thing about bullish candlesticks, whenever it opens, it closes higher than the price at which it opened at. So let's say it opened right here. This is where it opened. This is where it goes to close, and this wick presents the highest price market actually go to. So got here and then dropped, eventually closed on right here. And then you also got here, all right, pushed down, buyer stepped in, pushed it up, and market went up and eventually closed out here. So that's how the candlesticks happen. So we have the body, the wick, and present the wick contains the high wick and the low wick, and we have open and close, right? So that is what we have. That's how candlesticks actually work. So now, since it's a bullish candlestick, which is green candlestick, or I'll take us to the chart so we can actually see it. You can see this is the price at which it opened from. It opened here, and then at some point, sellers tried pushing it down, but buyers refused, stepped in, pushed it in the opposite direction, and he actually closed. He actually got here and then eventually finalized closing here. So that's it. That is it for the bullish candlesticks. And then that takes us to sorry. What's happening now? Okay, let me go down to it for our time frame. What's happening? Anyway, let me draw another one. Let me just stay in drawing mode, right? Let me draw another one for us so that we get to understand. So let's say this is the bearish candlestick, right? So since this is the bearish candlestick, this would be the wick, right? This would be the low, right? This is the body right here. This is the body. So now, what this candlestick represent now? It represent a price open here. So let me put this is the open. This is the open, and right here, this is the close. Sorry, right here, this Right here, this is the close, and then this these are called wicks. That means price actually got down here, but then it rejected and closed back finally at the stop, right? So that's what I mean. And this is just a wick. So wick shows rejection, what actually wanted to happen, but at the end it didn't really happen. So it leaves the footprints, right? It shows us. So this is also a wick, right? So it means price opened here, buyers tried pushing it up, but sellers came down and eventually closed price right at this bottom, and they wanted to do more, but then eventually price finalized here. So that is what the week is about. So that is it. That is what the week is about. So that is candlestick anatomy. So we saw we have the open, we have the high, and then we have the close, right? So if everything I've said so far makes sense to you, drop number two in the chat box. Drop number two in the chat box. Drop number two in the chat box. Everything I've said so far makes sense to you. Drop number two in the chat box. Drop number two in the chat box. Let me know. Everything I've said so far makes sense to you. Drop number two in the chat box. Drop number two in the chat box. Okay, two. Just drop number two in the chat box. If everything I've said so far makes sense to you. Drop number two. Drop number two. Okay, two. All right, all right, all right, all right. Two. Okay, 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 okay. Two. All right, all right, all right, all right. Job number two. Okay. All right. Two. Okay. It's actually making sense. So you can actually move on, right? So that is basically candlesticks anatomy. It shows you web price, what actually happened, the decisions between buyers and sellers for that particular trading day, where it opened, where the highest price at which it got to, and where it eventually they decided to, to their business on. So let's say price that is for this let's say this commodity, it started selling at maybe as at this morning it was about the price was about, let's say, 100 naira, and then eventually it got to 500 naira, and then it got to 500 naira. That was the highest price it was sold for, and eventually dropped, and then at the end of the day it dropped to about, let's say, 300 naira. So that is the closing price. So remember, the opening price was 100 naira, the closing price, the highest price at which it got to was 500 naira, and then the closing price at which it closed for the particular trading day or the particular day was 300 naira. So that's basically what's happening in the market, and that's what candlesticks tells us, right? Where price opened and where it closed off. So yeah, so candlesticks, I would love to say this: candlesticks are not enough, and this is important that you know. If candlesticks alone makes people money, everybody will be rich. But then candlesticks, what I said, it's not about the candlesticks, it's about the context of the candlesticks. Later on you guys will be understanding what I mean by the context of the candlesticks. It should be combined with structures and key levels and also timing. Don't worry, over time you guys will get to understand what I'm talking about, right? You guys will get to understand what I'm talking about. You guys will get to understand what I'm talking about. Yeah, so that's basically candlesticks. And the next point I wish we are going to, we're talking about rejection, right? Price rejection. Now, what is price rejection? Rejection occurs when the market pushes price to a certain level, but then it is unable to hold there and price push back in the opposite direction. So, and this process is what creates the wicks, right? It creates candlestick wicks that you guys are seeing here, these weeks that you guys are seeing here. Let me take us to the live chat so we get to understand what I'm talking about better. So you guys see it for yourselves. Let me zoom in on one of the candlesticks. Let me zoom in. Let me zoom in. Let me zoom in. Let me zoom in. Let me use a clean side. Okay, you can see right here. Let me zoom in. Let me zoom in. Okay, you guys can see now. for this green candle right here, right? This was the open, this place right here. This was the open. And price sellers tried pushing price further, but buyers refused and pushed it back up to somewhere around here. And let me zoom in so that you can see the upper wick, the high, right? Let me take away, let me get rid of this line, right? Now you can see the high, right? And then eventually closed off around here. So that is basically that's what I'm trying to explain to you. Price open here, sellers tried pushing it down, buyers refused. It created this weak rejection. It means buyers are rejecting this price and it's pushing up, right? So that is basically it. That's basically what weak rejections are. That's basically what weak rejections are. Price rejecting a particular price and then gives us that week because it's indicating that price actually got to that place, but then it rejected and it didn't hold there, it moved up. So if what I said makes sense to you, drop number 3 in the chat box, drop number 3 in the chat box. If what I said makes sense to you, drop number 3 in the chat box, drop number 3 in the chat box. If what I said makes sense to you, drop number 3 in the chat box, drop number 3 in the chat box. What I've said so far makes sense to you, drop number 3 in the chat box. Drop number 3 in the chat box. Drop number 3 in the chat box. Okay, 3, 3, 3. Drop number 3, 3. Okay. Drop number 3. What I've said so far made sense to you, drop number 3. Okay, it's making sense. Okay, I'm a little confused on the weak side. Okay, a little confused on the weak side. Don't worry, hold on. But time for question and answers. Just hold on. You might not get it, but then later you might go back and rewatch the video and then you might understand. There'll be the session for question and answer. So you get to ask your question and then I get to break it down for you. So that is basically it. So the next stuff you're going to be talking about is the common beginner mistakes. The mistakes beginner makes. Now, since you understand that when candles are green, let me take us to the charts, right? When candles are green, when you're showing green candles, let me take us to the charts. All right, let me zoom out so that we get to understand what I'm talking about. When candles are green, it means buyers are in control of the market. Like you can see right here, you can see green candles, green candles, green candles. Buyers are in control, and price is just going up. Once buyers are in control, price just keep pushing up like that. So that is it. That is it. When buyers are in control, you see, price pushing up. And then when sellers are in control, we see price dropping. Like here, sellers were in control and price dropped. Buyers stepped in again and it's going up like that, like that, like that. So now the common mistake beginners make is once they start seeing green candle, they don't know how to do analysis, right? They don't understand candlesticks anatomy. They don't understand anything about the candlesticks. All they just know is okay, once price is green, once it's printing green candles, I'll buy. Once it's printing green candles, you sell. But that's the common mistake they make. That's common mistakes they make, right? Common mistakes they make. Be like, okay, they trade without the plan, and they lack patience. That's common. Like I said, candlesticks doesn't matter about the candlesticks. It matters about the context of the candlesticks, like timing. I mentioned timing earlier. So now they lack patience, and then they get to jump in, and before you know, they get to start losing money, and they come and start bashing up and down on social media for it's a scam, this one, that one, this one, that one, start saying the amount of rubbish that they have to say. So that is basically it. They lack proper knowledge and then they go and do what their mind tells them to do. And it's like as if a person carry their hand, press buy or sell for them and use their money and they're probably to make noise up and down on social media. So that is it. So the next point I'm going to be looking at is okay, time frames, right? Time frames. I think I didn't talk about time frame in the previous class, so let me talk about time frame now, since it's relating to our candlesticks anatomy. Let me talk about time frame. So now, what time frame really means is time frame is like is like representation of what is actually happening within that time period in the market. So that is representation of it. So now currently, if you look at my chart right here at the top, you can see I'm on the 15 minutes time frame. Means what it basically means is that every candle you see, every single candle you're seeing right here every single candle you're seeing right here, every single candle right here, all this tiny candle, it took 15 minutes to actually form for the final decision to be made, right? Every candle you're seeing, like this one, if you look at the timing right here at the bottom too as well of the candle, okay, wait. If you look at the timing right here at the bottom, it's Friday, 16 January 2045. You see the next one is 15 minutes later, 9 o'clock at the bottom. If you look at the bottom, next one is 15 minutes later, next one is 15 minutes later. So now we also have the 5 minutes time frame, right? This one now, every candle you're seeing here took 5 minutes to form. So time frames are just different. That basically market telling the same story but different representation of it, right? So you can see. So the 1 minute, every candle you're seeing right here took 1 minute to form. Every single candle. Yes. If I zoom in so that you get to see the time difference. If you can see this one, this was 20. This was 21 for 6. This one, next one was 21 for 7, just like that. And then the 1 hour is basically the same thing. Every candle you're seeing took an hour to form. The open price, so that is basically like what I was saying. Price open on a particular day and then later closed out. So that's basically what time frame tells us. Tells us like what is basically happening in the market. So 4 hours. Every candle you're seeing took 4 hours to form. And then we have also the daily time frame. Every single candle took 1 day to form. You can see this one was 9th, okay, Wednesday, 10th December. This one was 11th December, just like that. And then we have the weekly. Every candle represent what happened within that particular week, right? And then we have the monthly and the yearly, plenty, like that, depending. But then, as a day trader that I am, the only, the only time frame I concern myself with is the daily time frame, the 4 hour, the 1 hour, and the 15 minutes. I don't go down to scalpers that stick to 5 minutes and the 1 minute, and then swing traders stick to the 1 hour, 4 hours, and then daily, sometimes the weekly as well. So that is basically it. That is basically it. Since I didn't talk about time frame in the previous session, let me basically talk about it now. So if what I've said makes sense to you, drop number 4 in the chat box. Drop number 4 in the chat box. Drop number 4 in the chat box. Drop number 4. If what I've said actually makes sense to you, drop number 4 in the chat box. Drop number 4. Drop number 4. Drop number 4. What I've said actually makes sense to you. Drop number 4 in the chat box. Drop number 4. What I've said actually makes sense to you. Drop number 4 in the chat box. So that is basically the candlesticks anatomy. That's basically what we have for the candlesticks. That's basically what we have, right? That's basically what we have. That's basically what we have. So you can see I'm back on the 15-minute time frame. As a day trader, the 15-minute time frame is my time frame. That's how I get to get my entries and then decide on enter my trades. That's it. And then I get to do my analysis from the 4 hours to the 1 hour, to 15 minutes, and then I get to decide on where to enter from. So that's basically what I do in 15 minutes. Like I said, candlestick tells us a story on what is happening or what has happened in the market so that we get to take our trading decisions. Yeah, so that's basically what time frame helps us to do. So that's what basically so far it's making sense. It's making sense. It's making sense. It's making sense. All right, 4. All right, 4, 4, 4, 4, 4. So currently, I think we have plenty of time for questions and answers. So we have plenty of time for questions and answers. Let me just go back. Let me just give a recap of what we've said today. Today, first off, starting off, I talked about types of traders, and then I said we have scalpers, we have day traders, and we have the swing traders. Now, who are scalpers? Scalpers are those traders that stick to the smaller time frame, like the 1 minute, 5 minutes, to make trading decisions, to get in and to get out of their trades. So they're only looking to make tiny profits from the smallest movement in their direction, and then get out of the market. So they're only looking to catch 5 to 10 pips from the market, and then they're out of the market. Just 5 to 10 steps, and then they're out. But unlike day traders, we are looking for something more than 20 to 30 pips, sometimes 50 to 100 pips in a day, and then we are out. Now, the difference between a scalper and a day trader is a scalper gets to like a scalper can take so many trades within one trading day, but a day trader gets to take like 1 to 2 trades, just decent, sometimes max 4 for the day, and then we close for the day. So those are day traders, and then swing traders are people who actually get to swing traders actually get to hold trades for longer. They can open the trade on Monday and then they get to leave it till like Friday. Those are the kind of, so if that is your style, you don't have time or you don't want to be looking at the charts all the time, then being a swing trader is a very nice option for you. But I myself am a day trader. I get to like open my trades within that day, close it within that day, because I don't want to be sleeping knowing my money is hanging somewhere. Right. So that's why I open my trades within that day and I make sure I get to close it, be it a loss or be it a win for me. I'm out of the market till the next day. And so we talked about, next thing we talked about was how people analyze the market, right? How people analyze market. And then I mentioned that there are 3 types of analysis, right? There are 3 types of analysis, and we have the technical analysis, which is the first one, which is the one we actually do, where you study your charts, understand what the market is saying through candlesticks, and then you get to trade based on what you're seeing. And the next one is the fundamental analysis, where you get to trade with economic data of whatever currency pair you're trading. So be it GBP, USD, USD, you just trade based on the economies of that pair. So you study those countries' economy, and then you get to trade. Those are fundamental analysis. These are fundamental trading. For me, I'm kind of like hybrid, right, of both the technical and also a fundamental trader, because fundamentals, trust me, fundamentals is what moves markets, right? Fundamental decisions, like the decisions of the US economy, like their job employment, like NFP. Those who have been trading with me will understand that during NFP days, I don't trade. I always send an update. It's NFP. Let's stay out of the market because market moves crazy and you don't want to end up on the wrong side of it. So that will be on the later class. We'll talk about that. For me, I'm a mixture of both. I get to have a little of the fundamental and a little of the technical. So for the fundamental analysis, you use trading view to do it, right? This platform where you can see my candlesticks. And then for the technical for the technical analysis, we use trading view, and then for the fundamental, we get to use let me show us the platform. We get to use Forex Factory for it. My Forex Factory. Let me share my screen so that you guys can actually see what I'm talking about. So for the fundamental, we get to use let me show us get to use my Forex Factory. Let me show us right there. Don't worry, it's soon share. All right, share. You should be sharing by now. You should be sharing. Okay, right. So now you can see right here. This is what I use for my fundamental analysis. You can see right here all the data, US. Okay, this is Trump threatens all those stuff, right? So we come to calendar. Exactly. Now you can see now this tells us what is happening now. Like next week Monday, okay, tomorrow be Monday is USD bank holiday. So USD is they're going to be having their bank holiday, which means the banks in the United States will not be open. I don't know. Let me see what they're celebrating. Let me see. Okay, USD banks will be closed in observance of Martin Luther King Jr. Day. So because of that, price will move slow because banks in the United States are not trading. Like I told you, the market is open when banks are open. So since the United States banks are not going to be participating, and most of the pairs I trade are USD correlated, so I'll be staying out. And then on Tuesday, we have on GBP, that's the British pound, we have Claimant Change, then Bank of England, the governor daily is speaking on maybe interest rate. I don't know what he's speaking on. And then on Wednesday, we have CPI. So this is it. Now I customize my own to show me only bank holidays and red news. Now red news are news that actually affect the market aggressively. That's why it's red. And maybe if you open your Forex Factory, okay, let me see. Okay, now yellow means it doesn't have much impact, and then orange means it's medium. Okay, let me just apply it so that you guys can see. Okay, now you can see on Monday we are having some yellow, less small impact news on GBP, JPY, GBP, USM, on Japanese yen, and then on the British pound. And then we have bank ash means it's bank holiday. Whenever it's ash, it's a bank holiday. Whenever it's yellow, it's a light news, doesn't have much effect. Whenever it's orange, it just have a medium effect, or sometimes no effect at all. But whenever it's red, yeah, you have to like pay attention to that particular news and whenever it's gonna be released. So that's how I customize my own, because I only care about the high impact news and stuff. I don't bother myself with little impact news. So if what I've said has made it's making so much sense to you, drop number five in the chat box, 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 drop number five in the chat box. So that is it for the fundamental analysis. And then for the technical analysis, right? For the technical analysis, I get to use trading view. Let me take us to trading view so we get to see it. Let me take us to trading view. So now this platform, you can see, you can go and download it on your mobile. If you have a computer, you have a PC, download it on your PC. So you get to, do your analysis, right? And then you get to know the direction of the market, where it's going to, or where it's coming from, and where it's going. Because as we traders, we get to, how we get to decide on the trades we take, or the direction of trades you're going to be taking, is what has happened before, right? Like I said, price will always tell a story, and that story price has told in the past will always likely tell us where markets will be moving to in the near future. So that's how we technical traders get to trade. But fundamental traders, they get to use economic data, because it's basically the economic data that affects the markets, right? It's basically the fundamental data that affects the market. So yeah, I'm a hybrid trader. I get to merge the two together so that I don't get to be caught on surprise some days. So that is basically, and then sentimental traders, right? And then we have sentimental traders. Sentimental traders, okay, it's making sense to a lot of people. Five. So somebody asks, we need to learn the tools to use on trading view. Don't worry, don't worry. When we get to that point, you understand the tools to use. That is not a problem. When we get to that point, you understand the tools we need to use. So that is basically what we've talked about so far. And what else did I talk about? Okay, sentimental traders. They are traders who actually use the sentiment of people to trade, right? They get to find out if people are greedy. Now, what they get to do is, if people are greedy, people buy more, right? If people are greedy, they'll buy more. And then when people are afraid, they get to sell off. Traders, they get to trade. But I'm not a sentimental trader, so I don't really understand how they do their stuff. But the hybrid trader, between a technical and a fundamental trader, I get to merge the two together to trade. So that is basically it. So what else have we talked about? 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 Okay, we talked about the types of candlesticks, right? We have the bullish candlesticks and the bearish candlesticks. Like I said, when it's bullish, it means buyers are in control of that particular trading day. And when it's bearish, it means sellers are in control. And then we talked about the anatomy of the candlesticks, which is the open, where price started from in that particular trading day, the highest point, the highest price it got to, the low, which is the lowest price it got to, and then the close, which we finally closed out. And then we talked about rejection. Yeah, rejection is what creates about those weeks that I was explaining about. Price gets there, the opposite side pushes price away from that level. So that is how weeks are created. It shows us, that price actually got to that point, but then it was rejected and then removed away. So it's just like a footprint of where price actually got to and where it is right now. So that is just what it is. And then I talked about the common beginner mistakes, right? The common beginner mistakes, which I said is lack of patience and basically lack of knowledge too as well. They don't know what they're doing. They just feel okay because I had a friend back then that was was looking to trade into as well. And then when I asked him, how do you do your analysis? He does do analysis. Whenever I see green candle, he knows our price is going to be buying, and then he buys. Whenever I see red candles, that's just basic. Trust me, that's gambling. Because if someone asks you, Why do you enter in on this trade? You should be able to give the person a valid reason why you got in on that trade, right? So that is basically it. That is basically it. But then, so over time, I trust that you guys will grab the necessary knowledge so you get to understand how price really moves as well. So you get to make, advanced trading decisions, not gambling decisions. Exactly. So now I would love to know if you're confused, wherever you're confused at, let me know, let me know, let me know, let me know, let me know where you're confused at. Ask your questions and I'll do well to answer it. Just ask your questions and I'll do well to answer it. We have less than 20 minutes, so I'm going to prioritize your questions. So if you have questions you need clarity on, ask your questions and I'll get to answer them for you right now. Ask your questions. Ask your questions. Let's ask your questions. Okay. Okay, someone asked a question. Let me see. Yes, question time. Yes, question time. Question time. Question time. Yeah, go ahead. Ask your question. Let me know what your questions are. Whenever you're confused, trading related question, please. Trading related questions. No jokes. Trading related questions. So ask your questions. Ask your questions. This one that you guys are not asking questions. Everything makes sense to you guys. Seems everything you guys understood everything. I doubt you guys should ask the questions. Or you guys are never listening. So you guys should ask a question. Okay, so how do you know when to buy and to sell? Okay, so someone asks, as a technical trader, how do you know when to buy and sell? Like I said, the candlestick always tells a story on how, on what to do next in the market. So over time, I think in the next class, we'll be covering this particular topic, how to know, how to basically understand what the candlesticks are actually telling you, the story they're actually telling you. But then from what I explained today, from weeks and the body, you guys understand how price actually moves, right? It opens at a particular price. For example, this today, people decide that they're going to sell this for 100 naira. So this morning, let's say this morning, it opens at 100 naira by 8 a.m. It sells for 100 naira, and then it dropped from 100 naira to 95 naira, 80 naira, and then eventually goes up to 500 naira. And then finally, by the end of the day, it's now being sold for 300 naira. So already now, the candlesticks will show us, right? Now, that point where it got to 500 naira, it will show a week, right? The point where it got to, you know, when we go to 85, 90 naira, it will show you weak. And then where it opened and closed, that's where you see the body. It opened and then it closed, right? So that is basically it. I hope I answered your questions. So okay, let me throw a little light on what you're saying. So as a technical trader now, how we get to buy and sell, like I said, context of the candle matters, where the candles are reacting off from, where they are rejecting from. That is how we get to know the direction of the market. So in the next class, I think we'll be able to cover that so you get to understand. Somebody asked, what type of candle can make you spot a reversal in the market? Oh, I think this guy is already an intermediate trader. He's not doing all this you guys are saying. Okay, so like I said now, what type of candle can make you spot a reversal in the market? Like I said, weak rejections. I don't know if I talked about that. Rejection, price rejections, where it's rejecting from. So price gets, and it's not just basically candlestick rejecting, is price rejecting at some certain levels, right? In the next class, we'll be talking about that. At some certain levels where price is rejecting from, then you get to understand, okay, that is a reversal. Price will be reversing pretty soon. So, so somebody say, so with this information given now, can we be able to read the market and place a trade, or is there any other thing we need to know before we're able to read the candlesticks and open a trade? I think there's a lot more things you need to know. Currently, I'm just giving how price really moves in the market, right? But why you get to see those candlesticks form, because candlesticks doesn't make sense to people, right? One of my friends was like, bro, how you think they understand all this is like, I don't understand one thing. I'm like, how do you know? So now basically already now with that analogy I gave on, if this bottle water, you get to understand what is basically happening. So if price open at 100 naira and then close at 300 naira, it means people bought more of that, right? there's actually a demand in the market. So now, since there's a demand in the market, you already know there's a demand in the market. People are buying more. So now, what do? You just join them to buy, right? Instead of selling because people are buying more. So that is basically it. So now today you get to understand candlesticks anatomy, how it's formed, where it opens from, and where it closes at, why you're seeing weak rejections, always weak. Yes, so that's basically what I covered today. And let me see any other question. So any other question? Any other question? Okay, I said we need to learn the tools to use on trading view. Okay, yeah, don't worry. Over time, you get to understand the tools used on trading view. Mm, okay, okay. So that is basically it. So no other questions. No other questions. I think okay, many people missed out on. Okay, someone said is a little bit confused on the weak side. Okay, okay. So now let me go back to the chart and explain to you. Right now, take a look at this. This is how candlesticks looks like. There are different candlesticks, but then this is what it looks like. Now, this full part you're seeing, this rectangular part you're seeing, I try to draw, is called the body. You can see the labeling right here. This is the body. Now, this, straight line you're seeing here on top of the candle are called wicks. And then this point right here is the highest point price got to before dropping and eventually closing here. And this point you're seeing here is it's the lowest point it actually got to before coming back up. So you can see, so these are called wicks, right? These are called wicks or shadow, but we basically call them wicks, right? Except you're an outdated trader, I don't know who still calls them shadows, but they are called wicks, right? So now when price, since it's a bullish candle, this is a bullish candle. Okay, let me specify so that you guys understand. This let me specify so that you guys understand. Let me put it down. Okay, wait, oh, my screen has not been showing. Sorry. So whenever my screen is not sharing, you guys should do well to let me know, please. Whenever my screen is not sharing. Sorry. It's sharing now. It's sharing now. Okay, sorry. Sorry about that. Okay, let me go back to what I was saying. So now, okay, I hope the screen is sharing now, right? You can see my screen. If you can see my screen, drop yes in the comment section. If you can see my screen, okay, it's showing, it's showing. Okay, it's showing now. All right. Okay. So now currently now you can see now this is the body of a candle of a bullish candle. Let me like label it so that you know it's bullish candle. Bullish. So it's green bullish candle. That's why it's colored green. So whenever I see a green candle on the chart, you know it's a bullish candle. It means buyers were in control of that particular time. So if you're on a 15 minutes chart or you're on 5 minutes or you're on 1 minute or 1 hour and you see a green candle, you know that for the past 15 minutes buyers were in control. So that is what we call bullish candle. Bullish candle means buyers are in control. So now every candle now has basically four main parts, which is the body, the price at which it opened from, the close, the high, and the low, right? So now this is the body. You can see right here, this is the body. Now these are called wicks, right? Now this is a footprint of the market. The market actually got pushed down, came here, and then eventually came back here. So now this is a bullish candle, and then he actually now this high is also showing this is the highest point price got to. It got here, and then it finally closed here. So let's say it's open right here at this bottom right here. Stuff opened at 100 naira, and then at 100 naira it drops. From 100 naira it drops to 95 naira, 80 naira, and then eventually it comes back up within that same deal, that same trading day, now comes back up, gets to 500 naira, and then eventually, by the time the trading day is over, closes and starts selling at 300 naira. So that's basically what candlesticks is telling us. Now, same same thing when you sell. What's doing this thing? Sorry. Okay, let me go down to the 1 hour. Okay, same thing now when you sell. Now this is a sell candle. Now let me label it so that we know it's a bearish candle. Let me label it so that we understand that it's a bearish candle. Bearish, bearish candle. So now since it's a bearish candle, price opened somewhere around here. Eventually, this was the highest price it got to. So, okay, it got here. Buyers tried pushing it up. Sellers rejected the price and pushed it downwards. And eventually, it got here at some point. This is the lowest point at which it got to. And then buyers stepped in again. And then finally, they will finalize and price closed here. So that is what it shows. Now, let me take us to a live chart. Let me see BTC. I think BTC is open. BTC is a 25/7 market. It's not like currency pairs and gold that is closed on Fridays. BTC crypto is always open. Okay, now let me take us. Now you can see this candle. This candle is still forming. You can see right here. Okay, let me take us to the 15 minutes so you guys understand. So you can see right here. It's just in the next 2 minutes right here. Right here, you can see the countdown right here. In the next 2 minutes for 7 seconds, this candle forming right. Let me zoom in so that you guys can see it. Will be closing. Now, this is what happened. You're seeing it right here that eventually price dropped to this point, but buyers are rejecting it. And now let's see how it eventually closes. Okay, now it's green now. You can see it's green because buyers have actually pushed the price back up higher than where it opened from. It opened here at this bottom. I don't know if you can see it. It opened here at this bottom. And now look at where price is. So you can see. So that's why the candle now has turned green because buyers now are in control right here of this time period. So it's 15 minutes. So in the next 2 minutes, it will be closing. And then if I go down to the 5 minutes, so it's basically the same thing, different representation. Market is basically telling the same story, different representation. So you can see now you can see this candle, this green one right here. Let me zoom in so that you get to see it. So you can see this green candle right here. Price drops here, right? And eventually closed here. And now a new one has popped up. And in the next 1 minute, this new one will be closing. Now, same thing on 1 minute time frame. That I see. It's telling the same story but different representation of it. So you can see now in the next few seconds, this one will be closing. So you can see, wow, buyers stepped in aggressively, and you can see how price is pushing up. So that's how candles are formed, right? It's basically, candles are actually telling us what is going on in the market. People who are buying and who are selling, right? At that particular trading time. Oh, we can see. Now, if you go down to the 15 minutes time frame, you see the same thing. Okay, you can see, right? It's telling us the same thing. Now, this one is left 1 minute, 1 minute time to be closing. It's basically telling us the same thing, different. Okay, now you can see a week has formed. Right, a week has formed right here. Okay, pushed up, it got here, and then it dropped. Oh, it's going to cover the week. So that's just how it is. If eventually, if this 1 minute, this will give few seconds, next few seconds, if it elapses and price is not able to cover back, you see that a week will form there. That's how this one was formed. Price actually came here, opened here, pushed up, dropped down, dropped down, dropped down, and then it closed bearish. So you can see a week has formed right here. So let's just wait it out. Let's wait it out and see how it goes, how it goes. Next 17 seconds, we can actually wait it out. 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 Actually. So you guys understand. You guys understand, right? If what I've said so far makes sense to you, drop number 7 in the chat box. Drop number 7 in the chat box. What I've said makes sense to you. Let's see if it has closed. Okay, it has closed. You can see a big form because it got here and then it finally closed right here. And now this is another candle. You can see the countdown has started again, 14 minutes because I'm on the 15 minutes time frame. If you go down to the 5 minutes, you see the same countdown, right? Let's go down to the 5 minutes time frame. You can see basically the same thing but different representation of it. You can see the countdown has started from 4 minutes. Go down to the 1 minute. You can see that's how it is. That's how it is. So that's what time frame does. If you go to 1 hour, you see the same thing. All right, see. Now you're seeing this weak rejection on 1 hour because if you come down to 50 minutes, you're seeing, this this red candle here. So basically, every candle that you're seeing on the 15 minutes took 15 minutes to form. You can see this was around 6:15, and this one has opened around 6:30. You can see. So this is actually London time zone. Yeah, so it's not Nigeria. I think we're an hour ahead of London, so that's why it's an hour behind. But currently we're around 7:30. So that is it. That is it. So as you can see, it's melting because sellers are stepping in. So that's what it basically means. That's what it is. That's what it is. So okay, it's actually making sense. Seven, seven, seven. So that's how candlesticks are formed. Buyers and sellers just bidding for price and stuff like that till eventually someone gets the win. So it's just like a tug of war. The stronger side gets the win, right? It's like a tug of war, right? You know, stronger side gets to dominate, right? So that's basically it. That's how price moves day in, day out. Okay, you can see now it's red. You can see it's red because sellers are steps in. You can see it's red. Yeah, so that's it. So everybody's basically getting what I'm saying. Seven, 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 seven. Everybody's basically getting what I'm saying. Seven, right? So that's basically. So any more questions? If you have a question, do not to hit me. Let me know. Let me know. Let me know so that we can call it a day. It's already 7:30. If you have a question, let me know. Let me know so that we get to call it a day. If you have a question, let me know in the chat box. Let me know so that we get to call it a day. Get to call it a day. Let me know. Okay, you can see price is dipping. You can see it's dipping. It's dipping. It's dipping. You can see it's dipping. It's dipping. Okay, no questions. No questions. Okay, so basically people are assimilating everything. So now, no problem. No problem. So for those of us who would love to be a part of my Telegram community, you can see it's scrolling at the bottom of your screen right here. You can see scrolling at the bottom right there. So you just go sign up on Telegram. Let me drop the link. Drop the link in the chat box so that we get to like copy and then go sign up because I get to drop my trades day in day out. I get to drop my trades day in day out. All my trades that I take, I get to drop it for you guys so that you guys, while you're learning, you can also still like make money for yourselves as well. So let me drop it so that you guys can, go sign up. So yeah. So I dropped it. It's showing right now. You can go click the link. Click the link. And if you're here, you're not yet subscribed, hit subscribe so that you don't get to miss the next class. In the next session, we're going to be talking about market structure and key levels so that you guys get to understand the context of what I'm talking about when it comes to candlesticks. The context of the candlesticks. Like what I said, candlesticks doesn't matter. It's just context wherever it's forming. The context where it's forming, that's what really matters at the end of the day. So next session, we're talking about market structure and key levels. Market structure and key levels. So I get to mark my chart. So I get to know that someone asks, how do I spot the reversal? So with key levels, I get to spot reversals, right? And market structure. So that's how I get to spot reversals. So do well. Make sure you share this on your story. Share this so that people who missed can join in and you can go back, rewatch it so you get to understand better what we actually covered today. What we actually covered today. So that is it. That is it. So far, all I've said made sense. Drop number 8 in the chat box. Drop number 8 in the chat box. If all I said from the beginning, drop number 8 in the chat box. All I said from the beginning, drop number 8 in the chat box. Drop number 8 in the chat box. Okay, people are dropping 8. So you can see right here, it's kind of closed. It's about 9 minutes, but then I feel it's a close back up. It's a close bullish, but I think buyers will step in later on and then push price backwards. I push price upwards, sorry, upwards. So I feel price buyers will step in and push because, like I said, candlestick tells a story. What has happened is likely going to tell us what is happening. Now you can see a strong aggressive move on this candle. This candle is aggressive. See how full it is. It's indicating that buyers are actually in the market, are still in the market. So I feel this price will be closing bullish later on as well. Maybe before time around. Okay, you can see sellers are actually people being wiped out. So you can see later to start from it. Like I said, the price always tells a story. So as technical traders, we use what has happened in the past to know what's likely going to happen in the near future. So that's how it is. That's how it is. So you can see price will just keep pushing up because that's what has been happening, right? That's what has been happening. Like currently, this is a key level now. See this blue line, this is my key level. And if I want to take a trade now, I've taken a trade right here, somewhere around here for a buy, because I know that price will be pushing up. So this is what we're covering in the next session. This gray box you're seeing is also a key level, right? I'll be covering it in the next. I will have taken a trade for a buy, and you can see it would have been a profit. So for those of you wondering how I get, some people think it's magic. I just get there and buy now, sell now, and price moves in profit, and they think, it's magic. This guy is saying it's not magical. It's not worry. Next class we'll cover everything. Don't worry. Next class we'll cover everything so that you guys will understand. You guys will basically understand how I get to spot those trades, right? So you get to call out. So you get so whenever you see or whenever I call a trade on my Telegram community and you come back to the chat, you can know okay, so okay, this is why he called out that trade. So that is basically it. So I think we've actually come to the end of today's live session. And always remember today, okay, it makes sense, people. Okay, okay, yes, sir. All right. So always remember day is a new day to become a better you. So trade smart and always keep the charts lit, guys. Always keep the chart lit. So I'll see you guys in I'll see you guys in next class, same time next week Sunday, 6:30, 6:30 p.m. to 7:30, 60 minutes, and then we're out. We're out. You can see it's already an hour. Yeah, so this class was lit. Yeah. Also, basically that's it. That's basically it. That's everything you need to know. So come prepared next week Sunday, same time, 6:30 p.m. 7:30. Let's learn how to trade together. So all right, I'll see you guys next time. See you guys next week. Take care.